All right, guys, what's going on? My name is Mike, and I'm going to talk to you about my portfolio. So, my plan going forward for my portfolio is there's many different strategies that people use. There's growth investing, there's dividend growth investing, there's dividend investing, bond investing, all kinds of stuff. I'm going to tell you exactly what my portfolio breakdowns are and kind of what my main overarching strategy is. I'm going to go over the macro trend, not the micro stuff. So, the biggest thing right now is I have an M1 Invest account and I have an M1 Roth account. So this is just my typical invest non-tax advantage account, and over here I have my Roth account. So I'm trying to implement two different strategies. My first strategy is with my growth account. So this one is growth. For this in my everyday spend account, my plan is growth. I want to get the highest growth. I don't care about dividend. I don't care about dividend appreciation or dividends or anything about that. All I care about is just pure growth. So example, you buy a house for $100,000 and your plan is to sell for $200,000. That is an example of growth. Whereas in my Roth over here, I'm focused on dividend growth investing. So we're right there right here. So this is dividend growth investing. So what that is about, this right here is about you buy a $100,000 house, but your main goal isn't to sell for $200,000. It is to hang on to it, and you want to get that rental income. So say you get $1,000 a month. That's what this is. So my plan is over time, I want to cost average this enough where I can get my dividend percentage to between around 3 or 4%. Anything above 3, I'm a happy man, and that's subtracting the expense ratio from it. So if I get anything above 3%, that's my goal for this one. For my growth one, this is just high growth. I'm just trying to make things happen. With this. So with my growth, I invest in 3 different things. I invest in the NASDAQ, which is a Q. Then I invest in Tesla, and I invest in this actively managed index fund, and this is called ARK-K. I'm going to say this for everyone right now. This right here is the most underrated mutual fund on the planet. So I would take a look at this one right here. So this is all about innovative growth, and ultimately their plan is to take over the world. So NASDAQ, usually your return on investment is about 16%. Tesla's return has been over 20-30%. So let's just do 30%. This mutual fund alone, this gain is 25%. This dividend growth investing, so I have a total of 11 different holdings. I'm not going to go into the details of them, but again, the main plan for this is dividend growth investing. And over time, I want that money to be used in a way where I can keep building dividend, where, instead of getting a percentage that you're looking for, you actually get cash every month or quarter or whatnot. But this is you're just chasing some imaginary numbers. Eventually, my plan is that once this has gotten to the point to where I need it, which is 10 million, that's my goal right here. I quit everything at 10 million. Oops, that's supposed to be an @ at 10. I quit at 10 million. I don't do anything else after that. 10 million. So this is the plan going forward. Now, how do we get to this plan? And there's a lot of stuff going on the internet saying, some people are do penny stocks, other people, are doing this strategy, a lot of people doing dividend growth. What strategy is right for you? And honestly, there's no correct answer. This is just my opinion on what I'm doing with my money. So you guys take a look at what you guys need to do and you guys figure it out. Because for the most part, I like what I'm doing. I like the fact that over time I can get that dividend income in one of my tax advantage accounts. But then at the same time too, like I'm looking for that growth too. So I'm getting a match of everything else. My opinion on bonds though, unless you have $10 million, I wouldn't waste my time with bonds. Again, there's this huge recession going on. There's that, bug that everyone's catching, and it's not looking good for a lot of people. Even then, I still wouldn't be investing in bonds because right now is the best time to put money. If you have money, if you don't have money, stay safe. You got to go paycheck to paycheck, and you got to figure these things out. You got to make a lot of tough calls and cut back on stuff. So, we want to make sure you guys are safe. Your family's okay and stuff like that. And there's income and security coming in that fashion. So now let's talk about like what percentages you need to get to hit whatever goals you want to hit. So let's get this off the board. So my plan is once I hit this number value, I'm done. That's it. You never see me again. I'm not working, I'm not doing anything, nothing. This is my number right here. What is my plan? And what is something that you guys can do? So right now, I have a very simple plan, and the whole point is to be simple and to be consistent with it. I'm not rebalancing, I'm not an individual stock picker, I'm not a stock professional, I have no idea how to do that stuff. But what I do know, I'm a simple man. I can only take things simply, in the most simple manner, and apply it, and that's what I've noticed the most success happens. And that goes with anything in life. So my plan is every single month, $500. Every single week I put $125 towards my Roth and my growth account. So for example, this is a plan. So the plan is to invest $125 to Roth. This comes out to $1,000 a month. Again, a lot of people don't have an extra $1,000 a month just sitting around just so that they can do whatever they want with. And I totally understand that. What I want to challenge you guys to do is I want you to find the $10 every single week and put it towards investment. At this point in our lifetime, there's no excuse to not be putting anything away. There's no excuses. There's always something we can cut back on. Like, you stop. One of my McDonald's runs is $10.97. And I do that about every single week. Well, guess what? Instead of doing that one McDonald's run, you cut back on that and you put that $10.97 every single week into an investment fund. So you can open up an M1 Finance. A lot of companies are starting to have fractional shares, and they're also having zero commissions. That's just a new norm, and people have to live with it. And for the most part, that gives the investor like you a great opportunity to put money in. And I want you guys to empower yourselves by doing that. And again, sometimes people work like, well, what do I pick? What do I do? What I want you to do is I want you to do your research. I want you to pick something that you can I want it to be boring. I don't want it to be exciting. I don't want you to use this phone. I don't want anything. I always recommend the S&P 500, best investment you can do. That's for your typical investment. People a little more advanced, we can talk about different companies and stuff. But for the most part, you pick an S&P 500 and you put your money in. But this is my plan. So $125 every single week to invest and into my Roth. So it's $500 each month. Invest 100 each month to Roth. Now, when you guys notice my portfolio, my Roth is actually maxed out because I took some cash from my savings account and I put it into this because I thought the market was going to hit the bottom, and for the most part I got some really great deals on some of my dividend ETFs I invest in. The only thing is I wouldn't recommend that because after retrospectively thinking about it, most corrections from a recession take anywhere between 22 to 48 months. So it would have been a lot smarter to span that money out that I put in and put it in maybe a little bit more money, but not in chunks. I put them in chunks. So you know what? I'm still a young investor. I'm still making mistakes. So just want to tell that to you guys. So basically my Roth is already taken care of. So basically each week I'm putting in $125. Again, nothing too crazy. Like I can spend that more money on a night drinking, but this is the plan. So every single week, $125. Sometimes if I have more, pick up an overtime shift, I'll put a little bit more money in. But right now, you know, we just want to kind of ride this out and see what's going on. So how do I get $1 million and retire? Well, I'm gonna give you some percentages right now. What do these numbers mean? For the most part, I wrote out some arbitrary numbers on here on this board talking about, you know, your typical return that some people can be getting. So I have 7, 10, 15, and 20. Usually to get a return from 7 to 10%, that is your typical market gain. So for example, if you buy an investment and you're returning 7 to 10%, that is a really good investment. Like you should really stick with that, and you should be proud that you're getting a 7 to 10% return. What ultimately can yield a 7% return? So I'm gonna keep this simple. I'm huge into ETF investing. I think everyone should really just be focusing on ETF investing. Again, I know some of you guys enjoy watching stock watch lists and all that stuff, but I'm an avid believer in ETF investing. So I feel the majority of people's portfolio should be an ETF, more so like an S&P 500 one, and then have some individual stocks on the side. So to get this type of return, you're gonna invest in the S&P 500. So that's the your return you're most likely gonna get. So you invest in the S&P 500. For this right here, the 15-20%, what can you get that is going to yield these kind of returns? So for the most part, you can invest in the QQQ, which is the NASDAQ. This return is about 16%. That other thing I was telling you about is the ARKK. So this is 16 ARKK. The last time I checked, the return was 25%, but because with the market going down, it's probably a lot less, but I'm just gonna say it's 21%. And then the last stock is gonna be Tesla. And can't remember what the return on that, but I believe it's 30%. So for the most part, you know, your average investor makes this amount. I want to show you guys how to make this. Again, that is my plan to make this, but does that mean that I'm going to be getting this type of return? So if you average this out, so in the QQQ, I have 60% of my portfolio in, 20%, and then 20%. So these two are 40%, that's 60%. Is that going to average out to 15 or 20% return? I hope it's more than the 15%, because you know the amount you get back is a lot more. So I'm going to just write some numbers down, and I'm going to show you guys how you can retire being a millionaire. For the most part, if you started with $0 and you're putting $500 away every single month, getting 7% return after 40 years, so our number is going to be after 40 years, so after 40 years, after 40 years, I'm going to tell you how much money you would have as bulk and how much you can actually be withdrawing in a safe manner. So for example, after 40 years, if you're at 7%, you're going to have $1.2 million. So 1.2 million. If you get with a 10% return, you're gonna have $2.7 million. So at 10% return, it's gonna be 2.7. Now, I'm telling you guys because I'm not giving you all the extra numbers, I'm just giving you some numbers because again, things do change. But if you're getting 7% return, 1.2 million, 10% return, 2.7 million, now we start getting to the exciting portion. So if you're getting either 15 or 20% return, you'll see. If you're getting a 15% return every single year, you're gonna have 11.3 million. So you have 11.3 million, and this is where it really gets exciting. $47.9 million. So for the most part, you know, your average investor kind of stays in this zone. I'm a young guy, I'm willing to kind of risk a little bit more. I really am trying to hit these two numbers. For the most part, you know, again, this is not doing anything special. This is consistently investing $500 every single month for 40 years. Is that hard to do? I don't know, I just set everything automatic and I forget I even put money away. But, you know, could this money be used for other things like, you know, bills and groceries? If that's the case, then, you know, you really can't do this, and then, you know, you gotta figure out a different way. Maybe you could just stick with your employer 401k, but, you know, I got a 401k, I have my Roth, and this is excluding those tax advantage accounts. So because those tax advantage accounts for the most part use like, you know, index funds and this type of investing, you know, I'm okay with, for my regular investment account, aiming for these bigger numbers over here. So for the most part, like this is my plan. Hopefully, you know, you guys can critique. Is it better to time the market? Go for it. I'm just an avid believer that you can't time the market. So now, for example, say you wanted to live off of this when you retire. So there's this rule called the 4% rule, and from a Trinity study, it said that, you know, if you withdraw 4% of your money, that it would be like you're not going to run out of it. If you take out 5%, you're going to run out of it. And if, you know, anything lower than that, then like you can't live the life that you want to live. So, you know, make sure you guys want to be very intentional with everything you do. Like, what's the point of having 2 million, $47 million if you don't know what you're going to do with it? You know, you got to be very intentional with what you want to do. So for the most part, 4% of 1.2 is this is 48,000. Right, so basically, for the most part, if you take that 4% rule, you'd be able to live off 48,000 with 1.2 million, 108,000, 452,000, and 1,916,000. So for the most part, again, I'm trying to aim for this, and we'll see how it goes. So, you know, leave your opinions. You know, tell me how stupid it is. Tell me how dumb this is. You can never get a 15 or 20% gain. Perfect. Tell me. Prove me wrong. You know, if you thought this was useless, whatever. You know, just go on with your day. If you thought it was cool, give a like, comment, subscribe. It really means a lot to me. So yeah, hopefully you guys enjoy it. This is my plan. Just, you know, consistently putting away $500 each month, you know, can pay out huge dividends later on. So, you know, hopefully we'll see how that goes, and, you know, just kind of follow me for the journey. All right, you guys have a good one.